So I'll be explaining the production cost, okay?
Okay, miss.
So total production cost. Oh my God, my spellings. Cost is equals to prime cost plus production overheads. Wait, I'll shift to this. So total will be equal to prime cost plus production overhead cost. So the prime cost will include all the direct costs. The direct material, direct labor, and direct overheads. Or we can say other direct costs. And in the production overhead, we will have indirect material, indirect labor, and other indirect costs. Because this is the simple mind map of what is a total production cost is. Okay, so yesterday I told about royalty. Royalty comes under the other direct cost. It is a direct cost and it is other direct costs. Okay. So the question was,
Miss,
cost information related to 500 pairs of shoes, production of shoe manufacturing business are given below. So purchase of leather, that is direct material. Purchase of thread, glue, needles, those are indirect material. Shoe swinging charges, that is direct labor. And purchase of shoe soles, those are also direct material. And depreciation, that is indirect overheads. And purchasing of new shoe swing machine. Purchasing of a machine that won't be any cost, that is non-current asset. So that won't be coming under production cost. And third one is shoe designing fee, that is royalty, that is overhead direct cost, other direct costs. So the question was 33 question number. So the items in production overhead cost are production overhead. Production overhead means all the indirect costs. So all the indirect cost means this indirect B and this one, depreciation. So the answer is third. Okay.
miss,
Yes.
miss, why can't we take royalty as direct labor?
No, royalty means it's like a copyright that we're going to pay for the. So see here, if we take an example of channel, if we are here in Sri Lanka, if we are going to produce channel shoes, then we have to pay a royalty fee for them. So that is the meaning of royalty. So that comes under other direct, not as labor. You understand
Okay.
the meaning of royalty?
Yes, sir.
Okay, so that is meaning of royalty. Royalty means we're going to pay for their branding or something. If we are using the channel name, then for that name, we are going to pay something. That's something, for example, we can say like that. So that is royalty.
Okay, miss, thank you.
Okay. So we were looking at this. So should I write it again and explain y'all, or you remember what we did last night?
I remember.
Okay, then we continue from this. So the questions are to find the capital, cost of sale, gross profit, and the bank loan interest, which is for income statement. So if we are going to put inside the income statement, we have to find the total amount. Total means annual. The related amount will be recorded in the income statement. And sales and distribution expense and net profit. Okay. Okay. So yesterday I've taken sales. Sales 720,000. And cost of sales, opening stocks, there were no opening stocks. Purchase 440. How 440 came? Both the cash and credit purchases. And there's no carriage inwards and any other expenses related to purchase. And cost of sales also, they told in the adjustment there was no cost of sales. So the cost of closing stocks, there were no closing stocks. So cost of sales will be the amount that is purchased. The purchase amount will be the cost of sale. So 440. So when we deduct 440 from the sales amount, we get the gross profit. And there were other income. So that is 80 and we added that. And now we're going to move on to the expenses. So before doing any question, we have to do the adjustments first. Okay. So here the first adjustment is to do the depreciation. Here they are saying distribution lorry should be depreciated annually at 10% on straight line basis. Okay. Distribution lorry employed by owner 800,000. 800,000 into 10%, it's 80,000. So that is depreciation. The second one, we know that there's no closing stock. Third, 6,000 should be written off as bad debt. Here, we have done that. So that also we have done. Okay. So moving on to the expenses. Bank balance, it's current asset. Debtors, it's current asset. And in debtors, we have bad debts. Cash balance, it's current asset. Machines and equipment, non-current asset. Distribution lorry, that is non-current asset. And when we are recording distribution lorry employed in non-current asset in the statement of financial position, we will deduct this 80 and then only we will be recording that. And 10% loan, that is 100,000. So loan interest here, that is also another adjustment. 10% will be 10,000. Creditors for 42,500. Okay, and expenses. Building rent paid. So building rent, what is that? Is it administration or distribution or financial expense?
Administration.
Yes, it is administration. Electricity paid.
Administration.
Good, administration. And loan interest paid.
Finance.
Yes, that is finance. And also we have bad debts. Bad debts comes under
Distribution.
good. And bank loan. Okay, here they have given like loan interest has been paid 7,500. But should we record this 7,500 in the income statement?
No.
So what will be the amount that will be recorded as bank loan interest?
2,500.
No. The amount for the year, the total amount. So the loan interest amount will be this 10,000. which is 100,000 into the 10 percentage. Understood?
Yes, miss.
Okay. So we're gonna record them. Expenses, administration expense 30 plus 60, 90,000. And loan interest paid. This is paid amount, but for the year it is 10,000. Distribution, depreciation will be coming under this. So depreciation will be distribution because this lorry is used for distribution. And another 6,000 bad debts. So altogether 86,000. So what is the total here for the expense? Is it 186,000?
Miss, can you tell again the amount?
Okay, so administration 90,000, how it came? Building rent and electricity paid. Distribution 80,000 for the depreciation and 6,000 for bad debts. Here they have given. And financial, it is 10,000. How? The bank loan amount is 100,000. For that 100,000, 10 percentage will be 10,000. Now you got it?
Yes, miss.
Okay. So altogether it is 186,000. 174,000 will be the net profit. So now we're gonna move on to the question. Okay, the first question here they are asking is the capital employed by Samsung to the business on 1st 2024 is. So capital employed means how much capital has the owner invested into this business. So he has invested 100,000 here. Here he has invested 100,000. And can you see here, distribution lorry employed by owner 800,000. So this also he has provided and this also he has provided on the first. And here also first. So both together will be the capital employed on this date. So how much is the capital employed?
900,000.
Good. Second question. Cost of sale of Samsung business for the year ended 31st 12, 2024. So we have found that. What was the cost of sale? 440. The purchase amount will be the cost of sale. Is there's answer? Yes. 440. Gross profit of Samsung business for the year ended 31st 12, 2024. So what is the gross profit that we found? 280,000. Any questions so far? No, right?
No, miss.
Okay. The amount of bank loan interest in income statement for the year ended 31st 12, 2024 is. So how much did we recorded inside the income statement?
10,000.
Good. We have to also cross-check the answers. Okay, third one. 36, first 37, okay. The correct item in financial position statement in this business as at 31st December 2024 is accrued bank loan interest 10,000. So they are asking the correct item in financial position statement in this business. Okay. Accrued bank loan interest is 10,000. No. Accrued bank loan interest, they have to pay 2,500 because they have already paid 7,500. So accrual is 2,500. Debtors balance is 86,000. No. 86,000 is the total amount and there we had bad debts. So 80,000 is the amount of debtors balance. Net value of distribution lorry is 720. That is correct. How? 800,000 was the amount of the lorry. Okay. We have to deduct the 80,000, which is depreciation. So if we deduct that, then we have to put the net value of 720 under non-current asset in statement of financial position. So that is the answer. Bank loan 90,000, no. Bank loan will be the same, 100,000. We won't deduct the interest there. You got it?
Yes.
Okay. The total of sales and distribution expenses in the income statement for the year ended was, we found that. They asked for the distribution expense, 86,000. Administration, yes, 86,000. The net profit of Samsung, this business for the year ended was, my God, 174,000. Okay.
Okay.
Any questions?
No, miss.
Okay. So take your 2023 paper. You have the paper of 2023?
Yes, miss.
Okay. According to the double entry principle, an account recorded as increased debit, decreased credit is. Okay, so if we are in accounting, if debit and credit, if we are going to record increase in debit and decrease in credit, what are the two transactions that we're gonna, two elements in accounting that we're gonna record as debit in increase and credit in decrease? One is asset. What's the other one?
Miss, can you repeat the question?
Okay, so in accounting, there are 5 elements. What are the 5 elements?
Asset,
Okay, asset,
income,
income,
expense,
expense,
liability,
okay, liability.
equity.
So here, if we are going, if increase in debit and decrease in credit means, what are the two elements that will be here recorded as decrease in credit and increase in debit?
Asset and expense.
Yes. And debit, credit. If decrease in debit and increase in credit,
Liability,
and
income.
then what about equity?
I think it goes to first one.
No, it goes to the second one. Because I can remember you did the same mistake on the first class. You have to learn this, okay?
Okay.
So note it down. It's in your grade 10 book. So if asset or expense, they should be recorded if asset or expense is increasing, they should be recorded in debit, and if they are decreasing, it's in credit. If it's liability, income, and equity, if it's increasing, it's credit, and if it's decreasing, it is debited. Okay.
Okay.
Okay, please remember this. Then only it will be easy to do the SOFP or income statement and all. Okay.
Okay.
So do you have any idea what you are going to choose for your A levels?
Actually, I have two choices.
Okay.
One is medicine, other one is tech.
Technology.
Yes.
Okay. But you must take an A for business studies.
Okay.
Summarizing, oh, we did that question, right? Accounting, according to the double entry principle, in an account recorded as increases debit, decreases credit is. So we saw that it will be asset and expense. So debtors account, is it asset, expense, or liability, or income? What is it?
Asset.
Okay. So there's the answer. First one is the answer. Creditors account, it is
Liability.
discount received. We are receiving a
Income.
discount. Yes, that is income. Capital account?
Equity.
Okay. In a business engaged in buying and selling computers, the computers considered as non-current assets are the computers which are used in the office. You understood this question? So here the business is buying and selling computers. But there are some computers that are considered as non-current assets. So what are those non-current asset computers? They are the ones that are used in the office. Okay, if we are going to use in the office, then that will be non-current asset. If we are selling the computers, then that will be current assets. Goes under inventory. Okay, next question. Following are some transactions occurred in Rohana's business during the month of January 2024. Purchasing a stock of goods on credit. Purchasing a furniture in cash, 75,000. Selling a stock of goods on credit, 40,000. And okay, it cost 25,000. Paying a creditor, 15,000. The questions are a transaction of Rohana's business that affect to assets are. Which transaction affect the assets? The equity of this business as at 31st January has been increased by. So on how much the equity has been increased, total liability of Rohana's business as at 31st January 2024 was 90,000. Before the above transaction, the amount of total liability of the business. Okay, they are asking the reverse way. Okay, we'll see. Purchase a stock of goods. So asset is equal to equity plus liability. Purchasing a stock of goods on credit. So he's purchasing 25,000. So inventory increases and it's for credit, then liability increase for 25,000. Second, he's purchasing furniture in cash. So 75,000 furniture increase, 75,000 cash will go out. Selling a stock of goods on credit, 40,000. So 40,000 will go out because inventory. And, oh, sorry. he's selling on credit 40,000 and the inventory is cost of 25,000. So 25,000 cost inventory goes out and he's selling on credit. Then debtors increase. Between this 15, what is this 15,000? 40 minus 25.
Profit.
Yes, profit comes under equity, 15,000. Paying a creditor. He has paid 15,000 to creditor and the liability will decrease. Sorry, yes. So the first question is, what are the transactions that affect the asset? First transaction, asset is affected. Second also affected. Third also affected. Fourth also affected. So the all four. Fourth one is the answer. The equity of this business as at 31st January has been increased by 15,000. Oh no. Oh yes, here is the answer. Total liability of Rohana's business as at 31st January was 90,000. Okay, at the month end, the liability was 90,000. Before the above transactions, the amount of total liability of business. So they are asking what's the amount on 1st January. This is 31st January. How do we find that?
By subtracting these 15 and above 25.
Then how much will be the answer?
$80,000.
Good. What is the... Yeah, that's all from this case. What is the transaction that both assets and liability in a business decrease? Okay, here they are asking asset, liability, both will decrease. Obtaining 5,000 by the owner for personal use, that is drawing. Drawing will affect the equity, so that is not the answer. Paying 15,000 to creditor. So when you pay 15,000 to creditor, cash will go out and liability will decrease by 15,000 because creditor goes out. So that is the answer. Paying 13,000 electricity bill. So if you are paying electricity bill, cash, and it goes, the equity will be reduced. Expense. Purchasing a stock of good 45,000 on credit, then 45,000 increase and credit 45,000 increase. So this is increase. Here they are asked about decrease. So the answer is the second one. Answer question number 23 and 24 using the following source document. So what is this source document is called?
Sales journal.
Sorry?
Sales journal.
No, it's not sales journal. It is a invoice. Here they have asked source document. You said sales journal, right? Sales journal means that comes under journal. Here, this is source document. A sales invoice will needed for a sales journal. So that is a journal and sales invoice is a source document. So this is an invoice. So in any invoice, on the top will be the seller. And this side will be the buyer. Okay. And this is sales manager who is responsible for this invoice. So here Raj Traders is the seller and Vijay Telephone is the buyer. So for the seller, this is a sales invoice. And for buyer, it is purchase invoice. Okay. He has sold it. He has bought it. Understood?
Yes, miss.
Okay. The prime entry book of Raja's business, where the information of the above source document is recorded, is. So here they have asked prime entry book of Raja's business. So Raja is the seller, where the information of the above source document is recorded. So which is the prime entry book? You said this is the prime entry book. Journal is the prime entry book. So Raja, where will he record this?
Sales
In
journal.
purchase, sorry?
Sales journal.
Yes, in sales journal. And you also need to know in sales and purchase journal. Okay, in sales and purchase journal, only the credit sales and purchase only recorded. Okay, only the credit ones.
Okay.
If you bought it for cash, then it will go to cash book. So that is an important point. They will be testing these points like sales journal and purchase journal. It will be always credit. Sales and credit purchases. Okay, the next question. What is the double entry to record the transaction in the above source document in the books of Vijaya Telephone Company? So Vijaya is the buyer, the purchase. So what is his how Vijay will record this transaction? He has bought mobile phones from Raj Trades. So Vijay he has bought it. He has purchased some mobile phones from Raj Trades. So how will be the double entry?
Purchase account debit 270,000 and
Mhm.
Raja's account credit 270,000.
Okay, good. And here can you see they have given trade discount here. And here if the payment is made before 25th of March, discount of 5,000. So 5%, then that is the cash discount. The trade discount they have deducted and 217,000 is the invoice amount. Okay.
Okay.
A transaction recorded in general journal of a furniture trading business. So they are trading furniture. But they have to record it in general journal. We'll see. Purchasing a stock of furniture 185,000 in cash. So if they are purchasing stock of furniture means they are trading furniture, right? So that will be inventory for them. So that is not the answer. Inventory means and they are purchasing it for cash, then cash book. Purchasing a stock of furniture rupees 175,000 on credit. No, why? Because purchasing is and for credit means that comes under purchasing journal. Purchase journal. Purchasing a stock of furniture rupees 125,000 on credit for business use. So if we are buying for business use, then that can come under general journal and he's buying for credit. So obviously it's under general journal. The fourth answer, purchasing a stock of furniture, this also for business use but in cash. Then that goes under cash book. So the answer is the third one. 26th question. A petty cashier of a business received 7,500 on 1st 4th 2024 for reimbursement of petty cash interest. The total of the petty cash expense columns of petty cash was 8,500 and the balance of the petty cash book was 1,500 as at the okay. When you read this question, the same kind of question was there in 2024 as well. This is 2023 paper. And yesterday also we discussed something similar to this. Right? So for y'all also, you can also get a question, same something like this with 2-month petty cashiers. Okay?
Okay.
So I don't have enough space here. So here they are saying a petty cashier of a business received 7,500 on this date, which is 1st 4th 2024. He has received 7,500 for reimbursements. It is for reimbursement. Reimbursement means that is equal to the last month's expense. Note this down. This is very important. Reimburse means last month's expense will be reimbursed. Okay, so last month means this month's expense was 7,500 for of petty cash interest. The total of the petty cash expense column of petty cash book was 8,500 and the balance of the petty cash book was 1,500 at 30th 4th 2024. So I said 30th 4th, 8,500 was the expense, right? The total of the petty cash expense column of petty cash book was 8,500 and the balance of the petty, okay. Balance was 1,500 and the expense was 8,500. Here they are asking the balance of the petty cash book as at 31st 3rd 2024. 31st 3rd means the balance of petty cash book. Okay, so how much is the interest?
10,000.
Yes. 8,500 plus 1,500 is 10,000. So last month, the expense was 7,500, right?
Yes, miss.
Because the 7,500 was the March expense. That will be only reimbursed on the 1st of April. So when we deduct 7,500 from the interest, then we'll get 2,500. So that will be the answer. Did you understand this?
Yes, miss.
Okay. A check rupees 20,000 received to the business from debtor Venura on 15th April 2024 was deposited in the bank Okay, so he received the check on 15th and he has deposited it on 20th. Select the correct double entry related to the bank deposit of the check. Correct double entry to bank deposit of the check. So when they are depositing the check in the bank, what will be the answer for what will be the double entry? Cash account 20,000 debit, bank account credit 20,000. No. Bank account, Venure's account. No. Here it should be when they are depositing, when the debtor giving you the check, the business. Okay, then what will we record it as? We record it as cash, debit, and Venure, credit. But when we are going to deposit this in the bank, cash will credited and the bank account will be debited. So if there's any answer like this, bank debit, cash credit. Third one is the answer. Any questions so far?
No, miss.
Okay. Select the answer that includes only the items used for adjusting the balance of bank account in the business. Select the answer that includes only items used for adjusting the balance of bank account in the business. Bank account is in the business. Bank statement is in the bank. Okay. That is direct remittance and payments in standing order. Okay, this is the answer. Checks deposited but not realized. No, if checks are deposited, then we will be recorded that in our business. So if there's any standing order or any direct remittance, means if your debtor has been directly remitted to the bank account or directly deposited the amount into the bank account, you will not know that. When this bank statement comes only, we will know that, and then we will be adjusting it in the bank account. So the first one will be the answer. Any direct remittance or any payment standing order or any bank fee. Bank fee or bank charges can be the ones that we will need to adjust. What is the transaction cost to decrease the bank statement balance than the balance in the bank account of the business? See, yesterday also we saw the similar question like this, but it's vice versa. It asks about increase in bank statement, I guess. So what is the transaction cost decrease? So bank statement and bank account. So which transaction caused a decrease in bank statement than the balance in the bank account? Okay. Checks issued but not presented to the bank. Checks deposited but not realized. We'll see from the last. Debtors remittance. If debtors have remitted, then will our bank statement will be increased or decreased? Increased.
Increase.
Yes. If dividend income has been received to the bank, that is also a direct remittance. Then the bank statement will be increased. If checks issued but not presented, we have issued the checks but they are not yet presented, means no.
Bank statement is.
Yeah. No. Yeah. If checks are deposited but not yet realized, then only the bank statement will show a reduced amount. So the answer is second. We have recorded 5,000 has been deposited, but here it not yet realized. So the bank statement will show a lower figure. In the year 2023, the total income of Ruhuna Sports Society was 230,000. The income. And the total expense was 180,000. Accordingly, for the year 2023, Rantharu Sports Society earned a. Okay, this is a very easy question. What's the answer for this? The total,
Surplus 50,000.
yes, because the total income is 230 and expense is 180. When you deduct 180 from 230, then the answer will be 50 and it's a surplus. Good. 31st question. The annual membership fee for S Children's Society is 200. Total members are 50 and 10 members have not yet paid for the year 2023. The membership fee included in the receipt and payment account of the society prepared for the year 2023 is. So what will be the membership fee that is recorded in receipt and payment account? Is it 200 into total members are 50 now? 50 or yet 10 members didn't pay, 200 into 40. Which will be the answer? In receipt and payment account. Sorry?
200 into 40.
Yes. Why did you say that 200 into 40?
Because there are 50 members, but
Only
10 members are not paid.
yeah, only 40 has paid. Okay, if it's in income statement of not-for-profit account, income statement means how much you should record,
10,000.
not receipt. How much?
10,000.
Yeah, good. Now you understood. Select the answer that shows the element of total production cost. Direct material cost, direct labor cost, direct other prime cost. What is prime cost? All these three are prime cost. So this will not be the answer. Direct material, direct labor, direct other expense, production overhead cost. Yes, this can be the answer. Indirect material, indirect labor, production overhead. No. Direct material, direct labor, direct other cost, production cost. No. So the answer will be the second one. 32 seconds, yes. Now we are going to move to the 33rd question. Following are expenses related to printing 500 children's book. So they are printing 500 children's book. The total value of indirect other expenses and production cost of a children book. Okay. Paper and ink used to produce a book. What is it? Direct material, direct labor, or other direct costs?
Other direct, indirect material.
No. Paper and ink, they are the main ingredient to produce the books. So that is direct material.
What means we can't count ink?
Yeah, but we can count the paper, right?
Yeah.
Okay. Here they have said royalty per book printed. What is royalty?
Direct other.
Yes. Wages for machine operator. And they have given, there are 2 machine operators. Then what is that?
Indirect labor.
No. They have said there are 2 machine operators. We can count it then.
Direct.
Yeah, that is direct labor. Glue, thread and other materials.
Indirect material.
Supervisor's salary.
Indirect labor.
Monthly electricity bill.
Indirect other.
Okay, so here the question is the total value of indirect other expenses related to children book production is. So what is the total value of indirect other expenses?
$20,000.
Easy. So what is the production cost? We need to find the production cost and then we have to divide it by 500 to find a children's book. Okay, so now we are going to find the production cost. 150,000. Royalty per book. So here see per book royalty is 500. So we have to multiply 100 into 500. How much is it?
50,000.
50,000. Wages for a machine operator. Here they have given a machine operator. And here also they have in brackets they have given 2 machine operators. So for one machine operator it is 35,000 and here there are 2 machine operators. So it is 70,000. And glue 5, 25 and 20. 20 and here the total expense will be 50. So what is the total?
32,000 total.
No. It is 320,000. And here we put the 1,000 because I think you're confused. Okay, now did you understand?
Yes, miss.
Okay. So 320,000 divided by 500, how much is it?
64.
640,000. Sorry, 640 rupees.
Yes.
So this is the answer. So whenever you read a question, see here they have given a, oh my goodness, a book. And here 2. And here for this they have given a and here per. So these things you have to be very careful, okay, when you read the question. So moving on to the biggest question. Okay. Answer the question 35 to 40 using the following information. S